Act and the regime as it impacts the real estate sector and all the necessary transactions that or instruments that tend to be used in that particular sector. Go ahead. We would like to give an overview of what we'll be doing today. As you can see from the slides, we'll commence with the opening and introduction, which I will take. We'll receive some feedback from realtors, which one of our colleagues in person of Noye Nonso is a good assist us with. Vivian will assist us with the overview of the Stamp Duty Act. Then we will take presentations by two key speakers. The Tax Policy Director from the Federal Inland Revenue Service and the Lagos State Stamp Duty Commissioner. Both of them will be giving us an overview and the implications of stamp duty and what the policy directives are from the respective tax agencies. Then we will anchor a Q&A session where members of the audience are free to ask questions and we'll probably give them the relevant answers. Then at the end of the day, we'll do a recap and then we will close. But before we go on, a few house rules. Attendees are to use the Q&A chat box or our email address, which is clients@vi-m.com, to raise or ask their relevant questions. We will be monitoring this in the course of this webinar. If attendees prefer to ask their questions directly, we encourage them to use the hand feature as contained in the Zoom platform, and we would admit them into the webinar for them to be able to ask their questions directly and possibly interact with the speakers or any of the moderators. We encourage an interactive session and thus ask attendees to post their names, businesses, service offerings, strictly for networking purposes. Chances are one or two people in the audience may be looking for something that you have, so feel free to use that feature. And at VM, we do encourage collaboration more than competition. Feel free to make use of social media posts on issues, topics, or matters that catches your attention. And as you do this, please tag VM Professional Solutions, any and all of the speakers, along with the hosts and moderator, myself and Vivian. Also, strive to use the hashtag SDA or hashtag real estate sector in your post on LinkedIn, Facebook, Twitter, and Instagram. I would like to give you a brief overview of who we are, what our firm does, and the various things that we've been involved in. VM Professional Solutions, codenamed VM, is a professional services firm founded in 2015, mainly to assist companies, organizations, agencies, and individuals in navigating their tax, audit, financial advisory, business, and people services needs through the use of digital technology. Everything we do revolves around the use of digital technology in rendering services to clients. VM is a firm of many firsts. It's the first firm to partner with FIRS to write and publish tax technical articles in a national newspaper for the education of taxpayers in Nigeria. We're also the first to partner with the Catholic Archdiocese of Lagos to carry out business advisory and tax clinic series for the benefit of its business parishioners. We're also the first to produce the tax law app in Nigeria, which is a compendium of the tax laws in a mobile app format. It's available on iOS and Android stores. We encourage people to check it out, download it, and make use of them. Even the Stamp Duty Act, which we'll be reviewing today, has been updated in the tax law book, along with the changes suggested by the Finance Act 2019. We produced the first VAT withholding tax PAYE tax calculator software, which is available on www.vi-m-taxassist.com. We also have a tax cover that we put in place for SMEs to provide cover for every subscribing businesses on all its monthly or annual tax and accounting requirements. We adopt or partner with global ERP business software solutions to digitize end-to-end business processes for a number of our clients and businesses. So if you're in the process of trying to digitize your business, from owning a website to rendering service, delivering, checking your accounting, making sure you're compliant with all the relevant tax authorities or legislations in the country. We are your trusted partner for that purpose. VM Talent Assist is also one of our initiatives. It's a total person software or website designed to assist employees whom we call talent and employees. Our latest initiative is www.fundandenterprise.org, which is a crowdfunding platform mainly designed exclusively to train, crowdfund, and handhold enterprises in Nigeria. It's been operated and managed under MSME Crowdfunding Foundation. These impact and value-driven initiatives are all geared towards the most effective media and technology needs to assist business and investors in Nigeria. We also hold periodic trainings, conferences, webinars like we're doing today, and seminars to discuss topical fiscal and business issues with all stakeholders and how to effectively navigate them. As you can see today, in our webinar today, we also have stakeholders from the government, stakeholders from the real estate sector, and we're bringing all of them to try and fish out or bring out salient issues to better ensure that businesses can operate smoothly in Nigeria. Learn more about VM on www.vi-m.com. With that, I would like to give you an overview, a small overview of what stamp duties entails. So stamp duty is a tax type that is applicable on the execution of certain instruments and special documents. For instance, receipts, agreements, contracts, title deeds, etc., with the aim to give it legal backing and enforceable in the event of a dispute or presentation at a law court. The Stamp Duty Act makes it mandatory that for any document to be presented in courts, if there is a dispute, except in certain criminal cases, they will not be accepted if they are not duly stamped. The enabling legislation is then called the Stamp Duty Act. SDA is an acronym for Stamp Duty Act. Is an act to provide for the levying of stamp duty on certain matters and documents, as earlier mentioned. It is the act that gives the enabling government agency, mainly two of them, which is the Federal Inland Revenue Service, for all transactions involving a company, and State Internal Revenue Services for all transactions between individuals. As we all know, there are 36 states in Nigeria plus the Federal Capital Territory. Each of these states and the FCT have their respective state inland revenue. So for the purpose of this webinar, we're being joined today by the Stamp Duties Commissioner for Lagos State. The Stamp Duty Act was first introduced in 1939, and it has undergone several changes and amendments leading up to the Finance Act of 2019. The key changes introduced by the Finance Act, which has a commencement date of 13th of January 2020, which is this year, are as follows. And this is in particular to just Stamp Duty Act. So these are just the key changes that the Stamp Duty introduced to Finance Act. The empowerment of the Federal Inland Revenue Service and the State Inland Revenue Service in the administration of stamp duties. Introduction of electronic stamping, which was hitherto not included in the Stamp Duties Act, and inclusion of electronic receipts and confirmations. Then it rested the issues of quarrel and affirmed the fact that for every money deposit to the banks, for every deposit to the banks for more than 10,000 naira, there's a 50 naira stamp duty levy, except for deposits that you make to in between your own accounts in the same bank. So if you have an account in Bank A and another account in Bank B, and you move money from Bank A to Bank B, stamp duty will apply. Therefore, FIRS is the competent authority to impose, charge, and collect stamp duty on instruments relating to matters executed between corporate bodies, that's company, or between a company and an individual, group, or body of individuals. Why the relevant state internal revenue for the purpose of this webinar, Lagos State Internal Revenue Service shall collect stamp duty in respect of instruments executed between individuals or persons at such rates to be imposed or charged in agreement with the federal government. Section 4 subsection 3 of the Stamp Duty Act further empowers the FIRS to claim and collect stamp duty from banks. This section categorizes banks and other financial institutions as falling under the interpretation of the word company as referenced in Stamp Duty Act. There's some school of thought bank by FIRS, but that provision actually rests the consent. There have been several there are several manners of denoting instruments, and some of them include impressed stamps, adhesive stamps, embossed or ink dye. In the course of this webinar, you will hear a couple of this nomenclature. It basically means the various types of stamps or the various means or types of stamps that can be impressed or used to denote or stamp the relevant instrument or document. Based on the Act, there are basically two types of rates applicable when dealing with stamp duty. That's the fixed rate or the ad valorem rate. The ad valorem rate is actually a percentage that is attributable to the value of the instrument. So for you to calculate the duty that is payable on such an instrument, you would apply the rate on the value of that instrument. Following the commencement of the Finance Act, we've seen increased and heightened efforts and attention from various government agencies, especially the FIRS, towards its resolve to strengthen its stamp duty operations and processes. Some of these initiatives include increased publications, campaigns, and videos educating the public on Stamp Duty Act. You would note that Stamp Duty Act, it's very, very old. It dates back 1939, but very recently we begin to see a number of information, publications, circulars, activities, because the current executive of the Federal Inland Revenue Service is paying more attention on it than previous executives. FIS has also launched its unique adhesive stamp for the sole purpose of denoting instruments. They also developed and launched an online portal, integrated stamp duty, which is available on that website. If you contact us at vm.com, we can assist you navigate that website, basically to support its operation, enabling interaction, payment, issuance, and collection of stamp duty certificates and receipts. It's a very informative site, and we encourage our viewers and attendees to visit that site and get familiar with it. In conjunction with the federal government, they also assisted in instituting a committee, interministerial committee, which was set up and charged with the responsibility to audit and recover 5-year stamp duty from relevant government agencies, ministries, departments, and what have you, with members drawn from the CBN, the Federal Ministry of Justice, the FIRS, and the Ministry of Finance, Budget, and National Planning. So that's just a small recap of what stamp duty entails, what the relevant government agencies have been doing, the key relevant agencies, and how the recent changes and introductions have been made in that landscape of stamp duty. Today, we're being joined by these notable speakers. The first speaker is Nonso Onyeeze. She will be joining us to give a view as to what the real estate sector is facing, because she runs an estate agency herself. Vivian, who is also a co-founder with me at VM Professional Solutions, will assist with a detailed analysis of some of the transactions, some of the calculations, some of the nuances of the stamp duty as it directly affects the real estate sector. Mr. Matthew Bojubola, who is the tax policy director at FIRS, will give us an overview from an FIRS perspective, what they are looking at, what they are doing, and how they intend to administer stamp duty in connection to the real estate sector. While Mr. Waidi Ogunori, the Lagos State Commissioner for Stamp Duty, would also give a perspective from a Lagos State side. So, ladies and gentlemen, I urge you to please relax, join us, listen to us, post your questions, and we will be able to answer them and give you all the relevant information. Most of our audiences have actually sent in a few things saying that they want to learn more, they want to understand, they want to appreciate, they want to know why this, why that. So we ask that those questions begin to come in. So without much ado, I don't know if Nonso is already with us. If yes, Nonso, I yield the floor to you. If you've got a presentation, you can start sharing.
Yeah.
Okay, she's not here.
Okay. I think Nonso joined as an attendee. I'm trying to find her. She's logged out again now, so I'm trying to find her. Depending when she joins us, I will just start my own section so that we don't waste time. So good afternoon, everyone.
Right.
My name is Vivian Chigozie-Nmonwu. I'm a partner and co-founder at VM Professional Solutions, and we're really thankful that you're joining us here, particularly to our panelists. Mr. Bonjubola, we thank you so much. Mr. Ogunori, we thank you for making out time, for being here with us. It's not easy for officers of your caliber, to honor this kind of invitation. But I believe it's the passion for service that drives you and continues to drive every well-meaning officer in Nigeria. So thank you so much, and thank you to all attendees. So I'll just go into the technical bit. Nonso was supposed to give an overview of the problem or pain points for real estate people, both agents and other players. So I'm going to go into what the SDA is saying, but what the Stamp Duty Act is saying, many times differs from what happens in practice. So I will allow the administrators to handle that part. So I, as a consultant, will just bring out what the Stamp Duty Act of 2004, as amended, has prescribed for several transactions that go on in the real estate sector. Real estate sector is large, and a lot of deals and transactions go on there, a lot of structures. So we're just going to bring out the general and common ones and describe them in a language that lay people would understand. So I think there are some questions popping up. Magnus, please, can you, maybe Nonso is in the background. Okay,
Yeah,
so.
I'm returning to us, so carry on.
Okay, so quickly, so there are some general provisions. I'm going to talk about instruments that are drawn up in the real estate sector, and they all have specific provisions, but there are general provisions that we should all have at the back of our mind, even though there are specific exemptions with particular or specific instruments. So instruments are generally stamped at the point of first execution. So the person that signs first generally stamps first, except in some peculiar cases which the Act prescribes. Then generally adhesive stamps are used for fixed rate. Magnus talked about fixed rate and ad valorem rates. Ad valorem is like proportionate to the value, while fixed is just fixed, regardless of the value of the consideration or the transaction or the instrument. So adhesive stamps, which is like a postal stamp, if you've seen a postal stamp before, usually used for fixed rate instruments, while impress stamps are the ones you can emboss manually or use an ink, the kind of stamp we use in the office that has ink and dye and the rest. And those are called dye. Any instrument for impressing stamp is called dye, according to the SDA. So there are several interpretations for these things. Then you have electronic tag or electronic acknowledgement of payment of duty for electronic transactions, mostly receipts. So we have stamp duties on instruments. Generally, Magnus has talked about it. Between individuals are payable to the state, while that's the one that happens between a company and individuals or body of individuals are payable to the FIRS. FIRS is the agency of the is the tax agency of the federal government. So stamp duty on transactions with banks, including receipt, that is on deposits, are payable to FIRS. According to the law, the company includes banks and other financial institutions. So if you're going to deposit money in the bank and the bank will give you acknowledgement that your money is there, they have to also pay, which is 50 naira. They have to account for it, which is 50 naira on the receipt. So for that controversy that has gone on for some time, our own interpretation is that FIRS is the authority to collect stamp duty on bank deposits. So real estate related instruments provided for in the SDA. So you have the major one is conveyance on sale. That is when any instrument that transfers the interest in any property to the buyer or to the purchaser. So any instrument that vests ownership or transfers ownership or interest in any property as the owner to the purchaser. That's what is called conveyance. Conveyance as a movement from the seller to the buyer, or any decree or order for foreclosure. That's if you're owing a debt and you use your property as security, title to your property as security, as in a legal mortgage, and the debtor, the creditor is now ready to foreclose or take over. That's take over the property. That's the foreclosure. So for conveyance on sale, you have different practical scenarios. You have, if you're buying property from maybe natives, you have the purchase receipts, you need to stamp it. If you're processing C of O, Commissioner for Stamp Duty will throw more light on this because that's his field. You need to stamp. You have deed of assignment that transfers ownership title. You have inheritance under those provisions of the SDA, sections 52 to 67. You have the exchange of property for property. You have the partitioning of purchase where different people buy and you partition it. You have a conveyance for considerations in security, that is for payment in security, marketable security, non-marketable security, license with grant to enter upon land. So all these things are covered by conveyance on sale, and collectively, generally, they are rated at an ad valorem rate of 1.5%. That's 75 kobo for every 50 naira on the value of property, or on the consideration paid, if it's a debt, if it's an instrument paid. If there are components of consideration, stamp duty recognizes that in a transactions you can have consideration of money, security, debt, different components. Stamp duty also recognizes that you can have different people buying, or a group of people buying one property. It also recognizes that you have separate transactions, should I say components of transactions. For instance, if you're processing land documents, you have different documents within the package you have to submit. If you're processing C of O, that also need to be stamped, different layers of stampable, should I say dutiable instruments. So it provides for all of them, but the general rate is 1.5% on the value of whatever, depending on the type of instrument or the consideration. Then the type of stamp is usually an impressed stamp. Then you have, sorry please. Then we have gifts. You have duty on gifts between living persons. Then any conveyance on transfer voluntarily giving from your property to another. So as in scenario could be deed of gift, and the rate, opinion on rate for deed of gift is to be expressed by the Commissioner for Stamp Duty, and it is payable by the grantor or transferor. For sale, for conveyance on sale, is payable by the purchaser, the buyer of the property to whom the interest or ownership is transferred. And type of stamp for gift is impressed stamp as well. Then you have appointment of new trustee. According to the SDA, the rate is 1 naira 50 kobo, the schedule to the SDA, payable by the transferor. Type of stamp is impressed stamp. Then you have power of attorney, rate 3 naira, schedule according to the schedule to the SDA, payable by the transferor. So the tax authorities here will tell us why practice is different from the act. Then the type of stamp is impressed stamp. Then you have legal mortgage. Mortgage plays a big role in the real estate market because not so many, in fact, it's not even wise to use all your money to go and dump in buying property. So many people will rather go for loans or payments in tranches or subscriptions. All those scenarios play out in the mortgage under the SDA Act. Is all covered. You have a scenario where you secure property is used to secure anytime that you use your property to secure funding for buying that property, and the title will pass on default. If the title of that property is going to pass to your lender, if you default, then it's called a legal mortgage. We have legal mortgage according to the Stamp Duty Act, SDA, and we have the equitable mortgage. Legal mortgage is the one that your title of the property will pass to the lender if you default, or you're using the title of property as security. While the equitable mortgage is the one that, okay, you just show that you have property by submitting the title deeds, but there's nothing in the agreement that says the title of property will pass to your lender. So for the legal mortgage, there are so many of the transactions that play out. Mortgage transactions are legal mortgage. So you have the annuity payments secured by title to property. You have assignment by way of security. You have agreements accompanied with a deposit. There are some people, some companies or some firms that advertise, okay, come and pay 200, own a house in bungalow in Lekki for just 200,000, then pay the rest in annuity form. So those are all parts of types of mortgage or financing arrangements. And if you're using the title to your property as security, is a legal mortgage. Then the rate, it's ad valorem rate of 0.375% on the value of the mortgage, payable by the mortgagee, that's the person taking the mortgage, or the property buyer, impressed stamp. For more clarification, the SDA does not stipulate the type of stamp on every of these transactions, but there's a provision that says if it's not expressly stated, type of stamp you should use. Please use impressed stamp. That means impressed stamp will apply. But as I said at the beginning, fixed rates are always stamped by adhesive stamp generally, while the ad valorem are stamped by impressed stamp. That's the embossed or the one that you use ink to stamp. So that's for legal mortgage. For equitable mortgage, pretty much the same, but you don't transfer title of the property to your lender or to your creditor upon default. So all those arrangements can be done using equitable mortgage. But if you're going to promise to pay in future dates, some people might include elements of promissory notes. That's a promise to settle debts on agreed upon terms. That's element of promissory note. And promissory note is also a separate dutiable instrument according to the Stamp Duty Act. But for equitable mortgage, the ad valorem duty is 0.15% on the value of the mortgage payable by the person taking the mortgage or mortgagee, to be stamped by impressed stamp, to be stamped at the time of first execution. That's the general provision for dutiable instrument. So you have appraisements, which means valuation of property. So for the rate for valuation of property is ad valorem, again, of 1.5% on the amount of the valuation. And this duty is payable by the appraisee within 14 days. 14 days, that's the person that ordered the appraisement, within 14 days after valuation. Then you have impressed stamp as well for that one. Then you have leases. Leases, they're also popular in the real estate sector because it's a kind of agreement, it's also a kind of financing arrangement. So you have this lease talks about this rate. I'm going to read out. They are related to the first agreement in relation to the lease. The first lease agreement, on renewal, something else applies. So I'm going to explain it. Then you have tenancy, tenement, where, landlord, tenant, you have deed of lease or sublease for land, because it also covers letting of land or tenement according to this SDA. Then lease agreements, except hire purchase. Hire purchase is covered by the SDA under general agreement. So hire purchase is where you would make an agreement to pay at the end of the payment term. Based on some conditions, the property might pass to the leasee. That's the person leasing. So for for leasing or for rent, anything rent is under lease. The rate is if the lease term. So if let's say tenement agreements or tenancy agreements, many of them are, let's say, 2 years, 1 year in Nigeria, not up to 7 years. So generally, everything will come under that category. So less than 1 year is fixed rate 39 kobo, but I'm not sure anybody does lease agreements for less than 1 year, but maybe not in real estate. Then 1 to 7 years is 0.78. Sorry, that's 0.78%, not 78%. Then if it's greater, 1 to 7 years, 0.78%. If it's greater than 7 years, but not more than 21 years, you have 3%. Then on the value of the lease, then over 21 years, you have 6%. So if you have deed of sublease, if there's a deed of lease, like if you buy a land that is owned by LSDPC, for instance, they're not going to give you C of O, they are going to give you deed of sublease because they themselves are the owners. So they will sublease to you, and it spans over 99 years. It's typically 99 years. So those are the ones that are over 20, that people would, that will usually span over 21 years. And the stamp duty on it is 6%. Then for indefinite term is also 6%, where title is passing to the lessee afterwards, treat as conveyance on sale. That's treat as the one we discussed before, conveyance on sale, or then any other lease, 3 naira fixed according to the schedule to the SDA. So for lease renewal, that's for the first term of the lease. For renewal of lease, where the initial agreement was duly stamped, there's a fixed rate of 10 naira. So type of stamp is impress stamp for the ad valorem duties and adhesive stamp for the fixed duties. Then you have agreements generally. Any other agreements, that's how the law puts it. Any other agreement that we have not specifically looked at under mortgage, lease, or conveyance is going to come under here. Scenarios will be agency agreements, that's for realtors, agreement for legal or consultancy services, due diligence services, construction contract, memorandum of understanding, hire purchase agreement, joint ventures by agreement, because you have joint ventures by incorporation of a new company, and you have joint ventures by MOUs or agreement. Then you also have employment contracts. People who work in real estate, they are employees as well. So generally agreements are rated at a fixed rate of 15 kobo, payable and stampable by the person who signs first. That's on first execution. When we talk about execution, according to the SDA, is signing. It just means signing. When they use all these big words in the law and you find out the true meaning, you begin to wonder why they bother to use those high sounding words. So execution, that's signing, the person that signs first at the time of first signing. Then you have type of stamp is usually adhesive stamp. So almost done, we're running late. Then policy of insurance for those who would like to insure their property. The schedule to the SDA provides for all other insurance that is not marine insurance or accident or life insurance. And it says treat it as life insurance, which is ad valorem rate of 0.075%. payable within 1 month by the insurer who receives the premium and who executes the policy of insurance. So the stamp is usually in press stamp. Then for
mine, a lot of work had been done, so I don't have to repeat any of those things that have been said. Maybe just a slight, just in addition to some of the things that I said, stamp duties actually didn't start in 1939. It actually started in 1923 in Nigeria. Actually, the first ordinance that brought in stamp duty was the ordinance of 1923. And what happened in 1939 was the codification of all the various ordinances into the ordinance number 41 of 1939 for stamp duty purposes. And that has also gone through a number of amendments, 1941, 1943, 1952. I think the last major amendment was what we had in the Finance Act of 2019. So when you look at the law that we have today, the Stamp Duties Act as of today, essentially was an importation of what we have carried over from the Ordinance number 41 of 1939. Now, in the introductions that we have had, we have been told the importance of stamp duty. I know that there is a temptation to see stamp duty as just another avenue for government to make money. Of course, every tax has the objective of raising money. However, stamp duty comes with an added benefit, or not just to the person. And if you look at the history, I think stamp duty came to the United Kingdom, I think 1688. I hope I'm correct. I think it's around 1688. And it was when people were having problem in the UK with respect to enforcing contracts, agreements, that the government decided to become a witness to egg any agreement if there are disagreements that have to be litigated. That agreement, if properly stamped, our government will be able to say, yes, we know about this agreement. We know that this agreement actually exists. And this is a major, major benefit, particularly when you look at the issue of real estate industry, whether talking about selling, leasing, or renting. If you look particularly on the issues of buying of land or other landed property in certain places in Nigeria, sometimes purchasers are made to pay more than once for the same property. And that is mostly because you pay to this family, and then when you thought you want to start enjoying peaceful possession, somebody else rises and says, no, 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 it's not the right person that sold to you. And then you can't take it to court because the agreement or the receipt that you have collected is not witnessed by government. And so sometimes you end up paying double for the same piece of land. But you could have saved yourself a lot of that problem if you had taken that agreement, that receipt, to the tax office and paid the relevant duty, such that you now have a document that you can say, look, government is a witness between two of us. And so if there are issues, I can take you to court legitimately. So we must look at that benefit that stamp duty confers, which other taxes do not confer. When you pay your income tax, there is no, I mean, just like lawyers say, quid pro quo. Where is a quid? what you get for an enlightened society. So if government decide to use the money to build a road, you may never travel on that road. Or government decide to build and you stamp duties, you have a document that you can defend your rights. You can defend what belongs to you. So that is one major benefit of stamp duties to those who pay. Now, I have listened to a number of issues that have been raised in the public domain. One of them have been addressed by Vivian. I'm not going to repeat her. The second issue is the issue of the use of adhesive stamps. Now, let me explain that there are three major ways that stamp duty is denoted on a dutiable instrument. It can be by way of embossment, by which way we put the document into a special machine in the FRS or in the state, whichever one is applicable, and the duty is embossed on that document. Another way we could do that is the electronic format, which is just very new to us, but which is already in operation in Nigeria, in which case we can electronically stamp a document. And then the third one, which is the very commonest one, which has also brought controversy, is the use of adhesive stamps to denote duty. And this usually is in respect of fixed rates, fixed rate duties, which usually, before now used to be 9 pence and things like that. I think now we are talking about 59. And now, so that's what essentially we use the adhesive stamps for. Now, because of convenience, before now, the postal service, I think it started as a P&T. It started as P&T, Department of P&T, and then before it became 9Post, had always been producing postage stamps, which are generally used for sending documents, for sending, carrying things from one place to another. It's an evidence of payment that you have paid for the carriage. It's just like a ticket of a document. That's what postage stamp is. But because in the time past, only government does that business. So postage stamp was seen as another instrument. In fact, some people call it store of value. I recall that in my elementary study of commerce, they told us that you can use postage stamp as a store of value. That's equivalent with money, because they believe that postage stamp do not expire, because it actually doesn't expire. So you can always have it. So you have a stamp of 50 naira today, it remains stamp of 50 naira in 10,000 years to come. So because of that, the government allowed that for duty that is fixed rate, you may actually buy a postage stamp and affix it on the document, and then it will be deemed to be properly stamped. But there is no specific law that says that fixed rates should only be paid with postage stamps, even in the old law. And then when things began to change, the first time the FRS launched its own adhesive stamp was 2008 or 10. I may be wrong with the dates now. But then the service decided to look at it and say, okay, the amount of duty collected by fixed rates is actually not much. And so for other reasons, we did not mass produce adhesive stamps then. But it was actually launched during the time when we had Madam Chigozie-Nmonwu as the executive chairman. But now, because of the misunderstanding generally from the public, mistaking postage stamp for the only adhesive stamp for the purposes of denoting duty, some organizations that the FRS had was encroaching on their mandate, which was not actually true. In terms of taxation in Nigeria, there are only two organizations that are allowed. One is the Federal Revenue Service for the Federation, not just for the federal government, for the Federation. And then the states' internal revenue services for the respective states. Maybe if you want to talk about the third one, maybe the revenue committee of the local government, which are not very prominent or not very visible. I think it's better put that way. They are not very visible. So there are no other agencies of government for the purposes of tax, apart from those ones that are listed. And so when an organization now decides to say you want to begin to implement the tax law, one begin to ask, where does the mandate come from? Knowing that taxation is a matter of law, it's not a matter of what we think or what we wish. It's a matter of what the law has stated. Now, coming back to recently, there was also some discussions in the public domain that the FRS has unilaterally changed the rates or introduced. I mean, there was even something that FRS has introduced a new tax. That actually is not correct. The stamp duties, like I've said, is not a new tax. It started way back in 1923. I don't know whether my father was born then, but definitely I was not born. And the law that we have as of today, essentially more than 90% are from the 1939 Ordinance number 41. So they have not changed the laws. So no new thing. Now, the rates that were advertised by the service were the rates that were harmonized by the JTB in 2002. The JTB had a meeting then in I think it was in Yobe State where they had their meeting. And this JTB is made up of the Federal Revenue Service and all the state internal revenue services. And so they came up and they had the power under Section 4.2, Section 4, Subsection 2 of this Stamp Duties Act, which enables them to fix some of the rates. And so they came up to harmonize the rate that we have as of today. And that rate had been in the public domain since then. I recall that in 2006, the JTB published a harmonization document of stamp duties rates, which were applicable in all the stamp duty offices, both in the federal and the states. So the service did not introduce any new law, did not introduce any new tax, did not introduce any new rates. They were all there and they had all been implemented. I know there was this the discussion as to the application of stamp duty to tenancy. And like I said earlier, the stamp duty protects the weak, particularly the tenants. I've been tenants in Lagos before now for many years. I know what we went through in the hands of landlords. And the landlord just dare you. Anywhere you want to take me, because they know that we couldn't pledge them in court. So what we have done is to just explain how the rates, and for tenancy, maybe for clarity again, which had caused a lot of noise in the public domain. Tenancy is broken into three major, and I use the word three. I know there could be a fourth one, just like Vivian mentioned. The major one is those that have between 1 year and 7 years, on which you pay 0.78% as duty. And then you have the one between 7 years and 21 years, on which you pay 3%. And then you have those that are beyond 21 years, on which you pay 6%. And so one newspaper, a very popular newspaper, even said that FRS imposed 60% tax on rent, which was not true. So I just want to make that to be very clear. Now, as to particularly the real property sector, you find out that most of the rates are ad valorem. When you are doing conveyance, for example, when you are doing temporary occupancy and all of that. And then we still have some that are fixed rates. And so what the service is doing now is that we are working with the National Assembly, the Ministry of Finance, Federal Ministry of Finance, so that we can take another look at the schedule. The stamp duty has only one schedule. To take a look at that schedule and see whether we need to review and update in line with current realities. And that will be engaging with all the relevant stakeholders as we commence on that work. So I think let me stop here. If there are specific questions that you want me to attend to, I will attend thereafter. So let me pause here. Thank you very much. God bless you.
Thank you so much, Mr. Matthew Gojubola, the Tax Policy Director for FIRS, for giving us that detailed insight as to the history and a few of the things our panelists, our audience needs to be aware of. Yes, there are a couple of questions, and while we ask those questions, we would employ Mr. Waidi to, and perhaps Vivian, to start getting ready to finish up our presentation before we bring in Mr. Waidi. So, Mr. Gojubola, there's a question here that talks about using a sales agreement, for example. Is it compulsory that the agreement must be stamped immediately the agreement is prepared? Or can this be delayed until when a dispute arises? And is there need to commence, and if there is need to commence a legal action?
Well, thank you for that question. I'm sure the Stamp Duty Commissioner probably would have done a better justice to that than me, but I will make an attempt, not being a stamp duty expert. Now, like I have explained to us in my stamp duty is meant to protect persons in the case of disagreement. And it's just like insurance, just like you are doing an insurance. And somebody asked me, when is the best time to take an insurance policy? Is it when a loss occurs or before a loss occurs? I would think that reason would dictate that you take a policy before a loss occurs. And so if there is an agreement between two persons, what the law actually says is that that document should be stamped immediately within a time frame. I think 40 days, I'm not sure now if I'm correct. And of course, there is a provision that's a let out in case you are not able to do it at that time. You can do it thereafter, but I think there is also a penalty that comes with it for not doing so. Now, if you now wait until there is a litigation, it depends on who your opponent is. If your opponent is stronger than you are, you may also find it difficult to, even after you have done those stamping, you may find it difficult. I mean, I'm not a lawyer. I'm telling the lawyers they know more about all of this than me. But the little I know about lawyers is that if they can catch you, they will catch you and they will rope you. And so you may also actually lose your opportunity and the benefits. So in a nutshell, for me, the law dictates that you do a stamping within a time limit. Reason also dictates that you make your roof before the rain starts falling. Thank you.
Thank you so much, sir. Vivian will be coming up now, but there's a question here on the panel, on the chat box, and it says, sir, please, when does this tax regime come into force? So as Mr. Gojubola rightly mentioned, this tax pre-exists Nigerian's independence, started far back as 1927, but was first made 1923.
Yes, sir.
Yeah, and it was first compounded and put into a law in 1939. It has undergone several changes, as I suggested or made earlier in my introduction. And the last change is the changes introduced by the Finance Act of 2019, which has a commencement date of 13th of January this year. So the tax regime is as old as Nigeria itself. it dates the history of most of us present. So Vivian, I yield the floor back to you to complete your presentation. Then we'll take any other questions. Then we'll bring in the Stamp Duty Commissioner for Lagos State. Thank you, Vivian, for being patient.
Okay, thank you, Magnus. Thank you to all our attendees for being patient with me as well. So I will just quickly wrap up. So for companies, which if you want to incorporate a company or you want to play in the real estate sector, there are also provisions, transactions as to issuing new capital, new nominal share capital, or increasing your registered share capital. So you have to make a statement as to the share capital and send it to CAC. So the rate is ad valorem rate at 0.5% payable by the company that is issuing the shares, the share capital. So then for the increase in registered share capital, you have 15 days from the date of the resolution to increase your registered share capital to stamp, to make this statement, stamp it and send it to CAC. Then the stamp there is impress stamp as well. Then you have loan capital if you want to issue debenture to acquire more funds for your business as a company playing in the real estate sector. So for the, okay, I'm still coming. So scenarios, issue of loan stock capital by real estate companies. And then the rate is ad valorem rate of 0.125% payable by the company as well, impress stamp. Then you have share warrants or stock certificate to bearer. That's for transfer of shares. For instance, you have real estate investment companies that people buy shares in there to invest, and they get paid in dividends. They get returns in dividends. You have share deals for real estate transactions where some people just incorporate a company over a real estate property and they sell the shares of the company, and the ownership of the company passes with the assets in the company to the new owner. That's a form of tax planning because capital gains tax are not paid. And here, if you do that as well, there are general exemptions as to transfer of shares in the schedule, in the SDA, in the general exemptions under it. So these are transfer of shares or securities in a regulated securities lending transaction. That's where that one is different from normal security exchange of security. This one is securities lending. I don't want to go into all that technicalities. This one was introduced by the Finance Act 2019. So everything is captured under general exemptions from stamp duty. But I know that in practice, they collect 500 naira. So the commissioner will please tell us why. I know. Okay, so you have receipts. So in real estate, it's about money. It's about collecting money now. So that's, so where for receipts according to the SDA means acknowledgement of monies received. Acknowledgement in any form, electronically, by writing a document, the normal receipt, by issuing your receipt from your accounting software, even by saying in your WhatsApp message, I've received this, confirm receipts, email, in any form that you acknowledge that you've received money. Then there are also bills of exchange, promissory notes, but those are captured under exemptions as well. So that's why I'm not covering it here. So it's basically receipt of money that is dutiable. Then you have bank deposits, and then you have other receipts. So people usually mix this up. The law provides for bank deposits separately, and it also provides for other receipts in the schedule to the SDA. So bank deposits are, there's a third party involved, which is a bank. So you pay a fixed rate of 50 naira for bank deposits payable by the person receiving the money in your account. Then for other receipts, you can receive money, you can receive bills, you can acknowledge that whatever receipt you issue or acknowledge, you pay a fixed rate of 2 kobo for receipts exceeding 4 naira, according to the SDA. So I agree that these things should be reviewed to reflect current realities. Because two kobo is very, negligible. Okay, then you have receipts by the Stamp Duty Act exempts receipts by employees. As when you pay salaries to employees, it exempts it from this stamp duty. So you have an adhesive stamp, or you can use, or there can be electronic tag or any acknowledgement in electronic format of duty paid. For instance, if you get debited for 50 naira by your bank, I believe it will suffice as acknowledgement of duty paid. So I talked about different transactions having different sub-components. For instance, if you issue promissory notes, if you have an equitable mortgage and you are required to give a promissory note that you're going to pay these debts over the time agreed, then you have another transaction, another instrument, which is a promissory note, which is supposed to be stamped. So the rate for that one is also ad valorem rate of 0.1%. It usually happens when you're paying for real estate in annuity or subscription or over time, over agreed upon terms without securing anything. Just issue a promissory note. Okay, I'll pay over this time. No security, nothing. So the rate is 0.1% where the amount is greater than 200 naira, but I don't think there's any of such notes that is less than 200 payable by the issuer. That's the person agreeing to pay, issuing the promissory note, agreeing to pay the sums. And also impress stamp is applicable. So that is where I end my presentation now. So Magnus, I yield the floor to the Commissioner for Stamp Duties of the Lagos State to please enlighten us.
Thank you very much.
Thank you.
Thank you very much, Vivian. And I know, Mr. Waidi, you're itching to take the floor. And like every sweet wine is always served towards the end of the party. There are one or two people who want to ask questions, and I would love to keep this session interactive so that it's not just the attendees listening to us. Let us also hear from them. So I would like to admit, Vivian, can you please, you have the right, please admit Collins Enebuze. He's indicated he's got a question to ask. Then while we're waiting for Collins to take the floor, Mr. Waidi, there is a question here that talks about, does stamp duty protect landowners when they are dealing with omoniles? I mean, from a Lagos State perspective. So while we're waiting for Collins to ask his question, you can just help give some guidance to that.
Good afternoon, the participants, all members, especially my boss from Federal Land Revenue Service. Good afternoon, sir. The question is straightforward question. When you have a deal with a monile and you have agreement that is stamped as and when due, then you are protected. If the land is not given to you or you have issue, then you can approach the court to be able to protect yourself, to be able to claim that you are the owner of the property. So I feel it protects the buyer of the property if it is from a monile. But if you have agreement that is not recognized by government, then you are aloof, you are not protected. If that answered the question.
Yeah, thank you very much, sir. Collins, your question? You've been admitted to ask your question, so please do that quickly.
Good afternoon. My name is Collins Enebuse. I'm from Ernst & Young. My first question is directed to Mr. Matthew Bojubola. Thank you very much for that insightful presentation. Very interestingly, you mentioned, and I wholly agree with you, that taxation is a matter of law. And speaking to your allusion of the JTB harmonized rates of 2002, you drew inference to section 4 subsection 2 of the Stamp Duties Act, the harmonized rates was occasioned. Having said that, it is important for us to look at the provisions of section 4, subsection 1 and 2. Of interest, section 4.1 of the Act, by which I mean the Stamp Duties Act, says that the federal government shall be the only competent authority to impose. Mark that word impose. Then if you go to subsection 2, it says the state government shall collect. There is no imposition. It says it shall collect in respect of instruments executed between persons or individuals as such rates to be imposed or charged as may be agreed with the federal government. I want to believe that the convocation of state inland revenue services led to the agreement of the JTB harmonized rates of 2002. But my concern is that those rates are in sharp disparity with the provisions of the Act. If we go back to the powers of the various tiers of government with regards to their powers to administer stamp duties, we will go back to the Constitution of the Federal Republic of Nigeria, 1999 as amended. The powers to impose taxes, particularly with respect to areas that the federal government has jurisdiction, is already contained in the exclusive legislative list. And to that extent, only the federal government has the powers to impose rates with respect to taxation. That is why section 4 sub 1 initiates that position by saying that the federal government shall impose under the doctrine, under constitutional law, there is the principle of covering the field. That is to say, once the federal government has covered the field with respect to an area that the state government also has some level of jurisdiction, which would be contained in the concurrent list, because taxation is also contained in the concurrent list.
Sorry, Collins, you need to go straight to your question because we're trying to manage time. Yes, so just go straight to
my question is with respect to the fact that, or rather my comment is that the JTB rate as published, varying the rates as contained in the Act, are in contradistinction with the powers of the federal government to impose taxes, meaning it is only the federal government that has the powers to impose rates with respect to taxation. And that is why subsequent to 2002, the federal government directed the JTB to do away with that JTB harmonized rates and to revert back to the rates as contained in the Act. That is my commentary. Then secondly, the question of contract, section 58 speaks to contracts that may be that transactions that may be chargeable as if they were conveyances for sale. And it talks about contracts for sale of goods. If that is the case, that means we expect that you should have contracts for services. And the provisions with respect to exemptions in the Act says that if any item is not specifically dealt with in the Act, it should be subject to a rate of 15 kobo. That is the law. If we have contract for sale of goods covered under section 58,
okay,
so why then do we have contract for sale of goods, a contract for services? That is two. My last question, please permit me, is with respect to the itemization of the time threshold for payment of stamp duties as contained in the integrated stamp duties platform.
Good afternoon. How are you?
No, so you need to go on mute. Your phone call is coming to webinar. So go on mute. Webinar. Collins, I think
go ahead.
Hold on.
She's on mute.
So that Matthew can respond to you. Hello, Mr. Bojubola.
Well, Collins, you know, the case between you and I has become that of David and Goliath. You are the expert in law. I've never been a lawyer, and I can never be one. So I'm just a taxman. The issues you have raised, I think you are actually agreeing with FRS, because I've listened to you. You are actually agreeing with our position. It is when we talk about imposition, there's a difference from imposition and fixing of rates. They are two different things. If you look at what sub 2 of section 4 says, it said both the federal government and the state will agree the rate. And the platform that is in existence for that is the joint tax board, where you have the federal government and all the states. 2020 review and harmonization that was done, all they did was to harmonize the rates. They did not add any new item. They did not delete.
Hello?
Hello, I think we're experiencing
It were changed. All the hard volume rates remain the same.
Go ahead, sir. We can hear you.
That's
okay. Mr. Waidi, like you know, they say we leave the sweet wine for when the main people have left the party, so that those that are staying behind can help do justice to what needs to be done. So I yield the floor to you, sir, as you take us through your presentation. Thank you very much.
Thank you, sir. Going through what other presenter has done, I don't think there's other special thing I'm going to talk about stamp duty that has not been dealt with, especially from my boss and Vivian. So I think I should be waiting for any question relating to practice in Lagos State, if there's any issue, so that I can clear that issue rather than to go through any special presentation, if it's okay with the organizer.
Okay, that's okay by us. Go ahead, Vivian.
So I wanted to say, you know, there are some places in the SDA that they mentioned that the commissioner will come or make an assessment when there are or the rate is not clear. Can you give us examples of those where you have had to rule or make assessments on stamp duty payable in practice?
Yes, let's look at assignment, transfer of a property that has title from the title owner to another party. As far as Lagos State is concerned, the law suggests that 1.5% should be taken as the stamp duty on the value of the property. But in Lagos State, there is existing a executive order from former governor to take 1.5% as suggested by the law, as imposed by the Stamp Duty Act. We actually take 0.5% of the market value of the property. That is just the difference between what it is in Lagos and
Okay, so you take 0.5% of the market value.
Yes, 0.5% of the market value, if it is going to be registered in the land registry of Lagos State.
So what if the the original document had previously been stamped.
Please, you are not clear, sir.
Take that again.
Magnus, you said you're
You are
not.
not clear.
Yeah. So my question, sir, is in that your scenario where a property owner is selling his property to a new owner, you collect 0.5% of the market value for stamp duty on that property. My question
If it's going to be registered.
is going to be registered. So my question
Yes.
is, if that property, if that title document and that property had previously been stamped, if it has previously on there has been a previous stamp duty on that document, do you still take that rate? Or what
On that
do you
document,
Yes.
there's no way you have property being transferred from the owner to another party that will have been stamped. Unless if you are talking about a property that is being acquired through governor's consent, that is the original owner selling to a party, then the party is selling to another owner.
Yeah.
That is where you have the deed of assignment prepared by the first owner of the property having been stamped. There's going to be agreement between the seller now, which was the buyer before, to another seller, to another buyer. They are going to prepare another set of agreements to be able to register the name of the new owner in the land registry. So it attracts stamp duty at the same rate.
Okay.
Because it's a different document now, it's a different agreement.
I see where you're coming from. So it's a new document that is being prepared. And chances, what about in situation the owner is just handing over the old document to the new owner, and perhaps maybe a new deed of assignment is being put in place, whereas maybe a document already has a C of O, the new owner is passing it on to the old owner is passing it on to the new owner for the new owner to take possession.
As a form of transfer, sales.
Same rate.
It's the same rate, because definitely for him to be the owner now, taken from the initial title, certificate of occupancy, you are giving out to another owner, then definitely you are going to prepare a document to show that I am transferring this property to another party, and you need to seek the governor consent if you have a title on the property. And the process, you need to prepare an assignment showing the agreement between you and the new owner to be registered at land registry. So definitely it's going to attract stamp duty.
Okay, so the question I wanted to ask earlier, sir, before we bring in Nonso, so that we can finish with all the speakers' presentation today. I mean, we've seen all of the activities that the Federal Inland Revenue are doing. You know, periodic or constant education of the taxpayers, the launch of the adhesive stamp, the integration of stamp duty platform, and what have you. What is the Lagos State government doing? What are the things in the pipeline, or what have you done since the commencement of the Finance Act, and or even before the commencement of the Finance Act, or from when you've taken it?
Okay, let me take it from the commencement of the Finance Act. Personally, I know, and everybody is aware, that JTB are working in the public domain as far as stamp duty is concerned. So when this one is done, there is going to be publication that is going to be agreed between the Federal Inland Revenue Service and all the state internal revenue service as far as stamp duty is concerned. So we don't want to rush to do any publication that will not be in agreement with whatever JTB is agreeing to put to the public domain. But definitely we are working on some things.
Yeah. Okay, sir. There's a question here. I think Mr. Bonjubola will be, I don't know, would like to take this one. Please clarify how tax identification number works when paying stamp duties. Mr. Widi, please, this one will be taxpayer ID for Lagos State. The person is saying, do we need, if yes, how does it apply to companies and individuals?
As far as tax ID is concerned, for Lagos State, it's called payer ID, payer ID, payer identification number. Without that, you won't be able to make payment to the government through the collecting bank. So you need to have a payer ID that is unique to you to be able to identify your payment and have a receipt that you have paid. So without a payer ID, it's going to be very difficult to transact any government with you, any transaction with the government.
Okay, so the same
Be
goes,
it stamp duty or any other payments.
the same thing goes for companies. Please.
Yes, as well. Company do have payer ID, states.
The tax
Individual do have payer ID.
Yeah. Okay, so thank you. Question answered. Yeah. Okay, please, more questions. Any other questions?
So while we're waiting for Vivian to fish out the question, Mr. Bonjubola, I have a question for you, and I've visited the integrated stamp duty platform. One of the things we noted is that there's a section for individual and there's a section for corporate bodies. So for individuals, they are talking about also putting a TIN number. But we know that for individuals who might have dealings to do with the tax authority, they probably won't have a TIN number, but a taxpayer ID. So if I'm making if I need to process a stamp duty certificate from the platform and I don't have a TIN number, I'm going there as an individual, do I just put my taxpayer ID number? Will it accept it?
I think we need to explain the little difference between PID and TIN. The PID, I also have one for Lagos because I also, when I was in Lagos, had to make some payments to government. That enables you to make any payment to Lagos State. Whether you are doing land use charge or you are paying taxes or anything you are paying, you need that PID. Whereas tax identification number is a unique identification number for the purposes of paying taxes, particularly income tax if you're an individual. And I know that in Nigeria, there is one database for tax identification number, which is hosted by the JTB, in which all the states in Nigeria are subscribers. I'm aware that Lagos State have yet to fully integrate with that. But the idea is you as an individual, you only have one tax ID, irrespective of where you live, whether you are in Osun State or you are in Sokoto State or whatever, or you move, your number remains the same, it doesn't change. And so that is what you use for the purposes of transacting tax business, anywhere you are. And it is issued by the JTB, either for an individual or for. And so if it is therefore to the Federal Revenue Service as an individual, you must have your TIN, which you can generate by yourself. Just go to the JTB portal, and then you can generate your TIN by yourself. I think that let me stop there. Thank you.
Okay, I also have a question, sir. So if I go to the stamp duty website of the one that FRS indicated we should go to, I see even the public notice you issued. I see a lot of differences between what the rates that are there and what we have in the law. So if I want to pay stamp duty and I run into a dispute or a situation where someone tells me, no, you can't pay this, but I know what is in the law and I would like to pay what is in the law. So what can I do?
I think the first question we need to answer, Vivian, is what is the law? Because it's very important to answer that question. What is the law?
The SD
What you have currently in the LFN are the rates that we have carried over from 1952 review. And that rates have since been reviewed in 2002 in accordance with the law. And so, if therefore you carry the physical law, the Gazette, it's going to carry the 1952 rate, and which is no longer the law. The law now is what the JTB had done in 2002. And that is what is being implemented all over Nigeria, whether it's at the federal level or at the state level. So that's why I said we need to understand what do we mean by the law. If any rate now is different from that which the JTB had sanctioned, then that is outside the law. So that would be my response. Thank you.
So, but sir, I just have a bit of tweak, and I hear what you say in terms of what's contained in the LFN or what's contained in the Stamp Duty Act and the harmonized rates as agreed between the JTB, federal government, and PUT. But we know the environment where we work, which is Nigeria, and that if something is not gazetted, meaning published by the print of the federal government, it's no longer, it's not a law until that happens. Don't you think that perhaps one of the things the JTB, in conjunction with the federal government, should do is that those harmonized rates maybe should have appeared in the Finance Act, or maybe now needs to be gazetted, so that we can rest this whole dispute as to it's contained in the law and it's in the harmonized rates?
Yeah, thanks very much for that. I'm sure you listened to the Stamp Duty Commissioner who told you what is already being done, and that, I mean, that Lagos State is confirming that FR is confirming that. I mean, that says that it's not a lie. So work is going on that, and we will get there as soon as we are able to have the agreement together, and then of course we now move on. But you must understand that it's not only in Nigeria, almost everywhere in the world, particularly in the developing countries, where we should depend on paper. I mean, when you talk about a law, you still go and carry a book to read.
Yeah.
Some other countries, they have gone beyond that. They change a law today, it's already there, changed on the internet. We have not reached that level. So that is where people are still carrying books that were printed before I was born. And when you take the rate in that, it's no longer the rate. But I agree with you, and you have a very valid point, and we are working assiduously towards that in very, very soon, and I mean very, very soon, we'll be able to have a gazette that contains the agreed rates within JTB. Okay. That is federal government and state governments.
Okay, people, we've heard that, so we can rest that. We can rest that issue. Mr. Whitey, there's a question for you here, and he says, "Sir, does this stamp duty protect one from Omonile, since the security of any title is based on the root of the title?" And he goes further to say, when the root of the title changes, how can one protect oneself even after stamp duty to earlier agreement? I think what is trying to draw out here, look at the process of how most people acquire their landed property in Lagos. You typically buy from Omonile, you probably may sign a contract with them, get a receipt. Then at the point, over time, you then tend to go and perfect your receipt. So this individual is asking, if I don't stamp my receipt with the Omonile and I've stamped my other title document, perhaps from LSDPC, or you have a C of O from government, does it still protect? Is there still any protection?
The best protection you have on your property is to register it with the land registry. And that involves a process. When you acquire a property from Omolile, you are going to be given a receipt and deed of assignment, or deed that is showing that that property has already been transferred to you. So the onus lie on you now to register, start the process of registering that property with the land registry. It is then you are fully protected. So if based on stamping the receipt, stamping the deed of assignment, it's just telling the government, giving a recognition that I have agreement with the Omolile. That is just the recognition. But the best protection you have is to register, start the process of registering your property in your name with the land registry. It is then you are fully protected.
Okay, there's a further question here as well, still from Collins, and is in connection to Section 23 of the Stamp Duty Act. And you, just to draw your mind, it's that section where there's a small table that talks about some kinds of instrument and the parties to the instrument with a header showing those who pay penalty. His concern is that it appears that there is a difference between the party that is responsible to pay the penalty and the person that is supposed to pay the duty. Mr. White, that comment is for you.
That shouldn't be any different or issue between who pays the duty and who pays the penalty. When it is expected that when you draw agreement or any agreement or instrument that is duty chargeable should be stamped immediately that agreement is done. So whoever is responsible to pay the agreement, to pay the stamp duty, is the one that is going to pay the penalty if it is not done when it's supposed to be done.
I totally agree with you. And if we draw inference from Section 106 of the Stamp Duty Act, it further says that any innocent person or persons who suffered any loss may actually recover against the guilty person. So if you suffer any loss by way of you presented a document and they said it's not stamped and you have to pay the penalty and you have to stamp it for your document to be accepted in a dispute, in the event of any loss, you have the right to sue that person that has the original responsibility to have stamped that document and recover whatever penalty or whatever losses you have suffered on that account, Section 106. So I agree with you completely that whoever is supposed to pay duty would still be the same person to pay the penalty. I mean, it goes without saying. Vivian, do you have anything to add?
No, I'm already attending to several questions on the Q&A. So
okay.
If you can take a look at the Q&A and see the questions and the answers we've provided. So just so that we don't exceed the time, we've already exceeded the time allocated for this webinar. That's why we're typing the answers. But if you have any more questions, you should send it through to clients@vm.com. I'll type it now for everyone. If you have any more questions, send it through to our email. Yeah.
What I want to do, audience, is I want to share my screen. And I remember something Mr. Chigozie-Nmonwu just mentioned. So just let me know if you can see my screen, Vivian.
Yes, I can.
Okay, so guys, what I want to do is I want to actually show you our tax law book and take you through what it's the benefits of the future, because paper law. So at this moment, I'll just show you. You see the tax law book here. So you click the tax law book. That's what it is. It takes you straight, and you can go into the law section. There's an in-app purchase if you download this for you to be able to access all of these laws. And from here, you could go straight and you type and search for stamp duty, and you go there. And you can see all the relevant sections of the stamp duty Act. And just to look at section 4 that was initially mentioned, subsection 1, you see the comment and it says the Federal Inland Revenue Service, and with the click of the top right-hand side arrow, it takes you to the next subsection where you see the relevant tax authority of the state shall collect duties in respect of any stamp duty. You also have the ability to be able to search right from any of the screen. So here you want to search for banks to say, okay, what's the information contained? Sorry, go back. What's the information contained in subsection that relates to banks? And it takes you through the app and searches for everything under banks. And if you want to look at personal income tax as it relates to bank, if you want to go to stamp duty as it relates to bank, you just filter through. So it's basically a compendium of all the relevant tax laws for your benefit, you know, from the comfort of your phone. What you're looking at is actually my phone, as you can see. And the app gives you the ability to interact with VM Professional Solutions. You can make or request for all relevant kind of service. From here, you can send us a message and you get your necessary response. You have access from the app to see what is happening or our posts on the various articles that we publish on our website. This is available here. So you can see all the various posts that we have on our website, or from the comfort of your phone. So like we said earlier, we're a firm providing professional services using smart and digital technology. So I'd like to summarize a few of the key points that have happened today. I don't know, Nonso still did not make it to join us. So, I mean, you heard the overview and the history of the stamp duty, as Mr. Gbojubola had rightly redirected us. Stamp duty is as old, is older than Nigeria as it were, or it's older than our independence, but it was first put into a law format in 1939. The rate in question, as published by stamp duty, Mr. Gbojubola has tried to clarify that this is not a rate that was unilaterally imposed by the FIRS. However, it's a rate that has been agreed between all the revenue agencies in Nigeria, because the Joint Tax Board is made up of the executive chairman of the Federal Inland Revenue and the executive chairman of all the 36 plus FCT executive chairmen together. And they've agreed a rate which was made available sometime in 2002. We encourage viewers to please look out for those rates and clarify and be sure that they do the right thing. He further clarified the issue with regards to adhesive stamp, and he stated category that there are basically 3 types of stamp that is being used in Nigeria. It's the embossed stamp or the impressed one, the electronic stamping, and the adhesive stamping. And he clarified further that there are the three major tenancy tax types when it comes to stamp duty. We did hear Vivian do a bit more deep dive and actually helped save the time of our speakers today, and where we reviewed some of the transactions along interpretations, along the scenarios, along the rates, and the applicable tax type and the applicable taxes for real estate instruments. Such instruments include, conveyance for sale, which covers everything that has to do with sale of a property in Nigeria. Duty on gifts, appointment of new trustees, power of attorney on property, legal mortgage, equitable mortgage. He spent a detailed time reviewing each and all of these transactions or instruments, as it were. And some sectors, but one sector has more exposure than the others. The real estate is one of those sectors that is heavily impacted or will be heavily impacted with stamp duties. And I'm bold to say that we've all been involved in paying one form of stamp duty or the other. We probably just don't realize it. So the onus is on us as taxpayers to be mindful to ensure that we're compliant because you don't want to be seen on the other side of the law. You need to ensure that as an individual, you know what is obtainable and you do the right thing, because ignorance of the law is not an excuse. And we also did hear Mr. Waheed, who is the Lagos State Stamp Duty, confirming and responding to a few of the questions, giving us insight as to some of the things that are work in progress. And we expect to see a few more changes in this landscape over the next coming weeks, months, or years. So we're hoping that today we've been able to assist, to give a bit of clarity into the discussion. So it's not like the tax authorities are there to milk, but Mr. Gbojugbola also clarified that the stamp duty is supposed even to protect, i.e. tenants, when it comes to their tenancy agreement or arrangement with their respective landlord. If you need further clarification on any of these issues, we want to encourage you to follow us at www.vi-m.com. You can send us an email. I'll share the slides because I will need to walk through our speakers just so that they can give us their parting words, and we can then begin to wrap up this. So look us up, VM Professional Solutions. We'll be glad to engage you further if you so require, and we can assist you to ensure that you remain compliant, or that you review and ensure that your clients or those that you engage with, because most of the people we have here are more of, thank you, Vivian, for putting that up. I find it difficult talking and screaming and changing slides. So VM, it's available at vi-m.com. Our email is clients@vi-m.com. Our phone numbers is there. We would also copy and paste this in the chat box as we walk through our speakers. I'll start with the last and that back to the first. Mr. Waheed, your parting words, please.
Well, it's just to advise all taxpayers to be aware of their responsibility so that they don't run foul of the law. Stamp duty has come to stay. If there's any issue, we are going to resolve the issue as soon as possible. And should be aware that any instrument prepared between individual and a company is a stamp duty chargeable. So every taxpayer should be aware, as well as the consultant, the professionals, so that they'll be able to advise their clients properly. Thank you.
Thank you very much, Mr. Waheed, for your time. We really appreciate you spending this almost 2 hours with us today. Mr. Gbojugbola, we yield the floor to you for your parting words. Mr. Gbojugbola, you're on mute, sir. Your parting words, sir.
Well, thank you very much, VM and all participants. I believe that, like I have said, stamp duty is one tax you pay and you get direct benefits. It's like you take an insurance because you are protected, your document is secured, your title is secured. When you have properly stamped them, you are able to assert your rights. And that is the message from the service. Thank you very much. God bless you.
Thank you very much, Mr. Gbojugbola. Vivian, your closing and parting words.
Okay, so thank you once again to our able panelists, our giant panelists, as we like to call them. And then something else that I would like to point out, if you're going to stamp your document with an adhesive stamp, you need to make sure that you cross it out. Crossing it out means writing your name and initials and dates. So that's what the law says, that if you do not cross it out, it will not be deemed as having been stamped. So you need to make sure that it's crossed out, you that you're stamping and endorsing. Then another thing to mention is the tax law book that Magnus talked about or showed us is on Android 4. It's also on iOS store. You can download it if you have Android phone. You can also download it if you have Apple phone or iPad. And then the reason why you're seeing the latest legislations, which is from the Finance Act, is that all the laws impacted by the Finance Act have also been updated in line. on the tax law book. So it's easy for you to read through and find out the current positions of those laws, those 7 laws, including the Deep Offshore and Inland Basin Production Sharing Act that was amended to last year. So thank you again to all our attendees, and we're going to be sharing this video on YouTube to enable those people who did not attend this webinar to also gain from it. And do stay safe and take care of yourself and your loved ones. Bye. Thank you.
So, ladies and gentlemen, we've come to the end of the webinar. I know there are 1 or 2 teaching questions people still need to clarify. We've got our email address. We encourage you to drop us an email. We'll take responsibility to fill those questions and go into a bit more detail. Thank you very much. Coronavirus is real. Stay safe. Use your mask, as you've seen Mr. White using his mask. Ensure you wash your hand. And my regards to your loved ones. Have a nice day. Thank you very much, sirs. Thank you, Mr. Whitey. Thank you, Mr. Matthew.
Thank you, sirs. Bye.